All right, what's up, guys? Welcome back to the second episode of the Full Port podcast. You have me, Alex, and my co host, Nick. Last time we forgot to give intros to ourselves, so we want to kind of like start with that. Nick, why don't you give a quick introduction about yourself?
Yeah, sure. So I'm Nick. I've been a software engineer working at companies like Palantir, and for the past 5 years, I've been building trading systems across like equities and crypto. Throughout like the more recent times, it's been a stronger focus in DeFi. But yeah, trading cryptos and equities pretty much.
Cool. Yeah. And my name is Alex. I primarily come from the founder builder side. I've been building startups for about 14 years now. Went through Y Combinator twice with two different startups. Um, Avid angel investor, have invested in over 50 startups from the seed stage. Several, luckily, have become unicorns. I can't say it's a skill, a little bit more of like a Silicon Valley slot machine type effect. And now dabbling in public markets, thanks to Nick. And he's very successful, and so he got me into it, and, we scratched that itch. And so today we have a lot on the docket, just a little bit of an agenda of where we're gonna start. I think starting at the very top, we're gonna start at the state of the market sentiment. How do we feel about the market? What's moving the market in our opinion? We're gonna move into a little bit of coverage on AI, move into crypto, and lastly, talk a little bit about portfolios, what's in it, what's going on with those portfolio companies, and I think that's a great place to start. So starting at the very, very top, state of the market, Nick, even before we talk about rate cuts, QE, whatever it may be, what is driving the market right now? What are your thoughts here?
Yeah, it's weird at the moment. I've been kind of like sideways and choppy since October 10th, which is when we had that large liquidation day led by Trump's tweet. There's been like these headlines about we're in a huge AI bubble and like people are generally being risk off because of that. But if you look at the company, or if you look at Mag 7 earnings, they're blowout. Meta, Amazon report really, really great earnings, strong growth, continued growth, and an acceleration as well. Same with Nvidia, which is like the leader in all this AI uh, force that we're seeing. And then like more recently in the past week or two, we saw Oracle kind of go through a bust, but they also reported that their KPIs are just like going through acceleration. So it's a really strange spot where essentially we're seeing fundamentals be really, really good and market sentiment and stock prices kind of like not aligning with that. And you commonly see this actually because like you commonly would hear the narrative that markets do not represent the economy or markets don't represent like fundamentals. Like sometimes you hear that argument. And I guess like spots like this is why that comes to mind. Yeah, I guess like, yeah, we're currently seeing basically a bunch of sell offs right now and basically a lot of FUD. We
Yeah.
saw the CNN fear and greed index be like peaking towards like fear, and I think it at some point hit extreme fear in the past 2, 3 weeks. So yeah, it's strange. It's a bit of a dislocation of strong company performance with sentiment at the moment.
Yeah. I mean, just adding on to that a little bit, I think it's obviously very, very clear that the market currently today is driven by this idea of the AI narrative, how it's going to transform markets, the economy, so on and so forth. I think like, you know, in terms of is AI a bubble or not, I think is the really big question on every investor's mind. And as Nick, you just mentioned, a lot of it is driven by fundamentals. Why is it that we're seeing strong fundamental growth from a lot of the Mag 7, yet markets are starting to look a little bit skittish? I think from an investor mindset, I think a lot of investors are basically, I think mentally, we're getting to this point where a lot of people are very skittish because we're constantly trying to figure out when the top is. The market, SPY has grown at all-time highs. We've rebounded so quickly, and everyone's constantly, with one foot out the door, constantly going like, "Is this it? Is this it? Is this it?" And
Yeah.
the tough question is like, as you mentioned to before, like, let's like kind of double to click into like the fundamentals a little bit. You look at the fundamentals in these companies, and you go, "Well, the companies still seem to be growing. Does that mean we're in a bubble?" But then you have a lot of narrative right now, right? Maybe the bear is saying like, okay, well, this is like really circular revenue, right? Like Nvidia obviously is crushing it on a quarter to quarter basis, but is this all borrowed and levered money? And so a lot of people are trying to examine and figure out, is that going to implode, right? But on the upside, what's the bull case? I mean, I think it's really tricky to say because you've had a lot of advances kind of happening in AI where there's a lot of productivity. There's a lot of usage. It isn't necessarily like the dot-com boom where people were laying a bunch of, cables and it was basically dark, right? No one was using it. There was no utilization. It's very, very different. And so it's very tricky, right? Everyone's using AI. We can't get enough of these data centers. The question is it subsidized? We don't know. I mean, it is subsidized, but like it's quite a tricky situation. And so that kind of leads kind of into what you previously just mentioned. Markets took a dump on Friday because, Oracle basically came in. Well, I don't know if Oracle or OpenAI basically said it, but they basically came out and said, hey, look, that $300 billion deal we just did with OpenAI? Well, actually, we're a little bit behind, right? Like, wait, hold on. And then so the market just dumped, right? Midday, the market dumped. And then Oracle quickly came out again. It was like, wait, 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 wait. It's not because of any debt issues. Don't worry, guys. We've signed the leases. It's because we can't get enough labor to build the data centers, right? And so,
Yeah.
what do you think of that? It's like just that moment, just that release you suddenly saw the markets dump. I think SPY dumped like a point and a half or something like
Yeah.
that, right? What's your thought on the market right now? Like, are we good? Are we bad? How are you thinking about it?
Yeah, I mean, we're in a very, like, oddly headline-driven market where, like, some, kinda, like, bad news just kinda, like, makes things react very, very quickly. I think you commonly see this activity in, like yeah, it's like you do see this activity commonly near some type of local top. That is, like, kind of true with, like, if you just, like, consider backtests and whatnot. Like, for
Mhm.
example, if we take a look back to, 2022, I think it was the first week, the Fed had released their meeting minutes, the FOMC meeting minutes. And in there, they kinda, like, announced that, "Yeah, we're gonna start to basically have more, like, QT happening." And that led to, like, I don't know, I think it was, like, a -2% day on SPY, and that was, like, the first time that has happened since, like, a long, long time because we just had, like, the roaring 2021 bull market. And then it's like, oh, some headline, boom, right? Just like kind of like instant crash. And yeah, it happened within a small amount of time. This was like a 2 hour period. So like, yeah, you see these like movements pretty often. Now it's a question of whether or not you'll have a pretty big player kind of come in and buy it up or buy this dip
Mhm.
back up or pretty big players. But yeah, like there's no certainty, I guess, but like yeah, I think because of where we're headed in terms of, like, what the big companies are saying, like, it's likely a spot where, like, we'll probably recover. Uh, like, obviously, Jensen is very, very biased, but he the way he speaks on, he's constantly on air. He's doing, like, a lot of, like, interviews and stuff, and every single one of them, he does talk about how, like, the demand is just increasing and how he like cannot meet that. So I think when we're in an area like that, it's probably like not necessarily like, oh, this is like a bubble bursting moment. There's
Mhm.
also the common saying where people are like, oh, you're not in a bubble if like everyone is cautious about whether or not you're in a bubble, right? Like that's a pretty
Right.
common saying you hear. And I think that's pretty true to a degree because then that means a lot of people are kind of cautious with like sideline cash and like not deploying as much. So, yeah, I think I think it's like a really weird cold feet moment that's kind of been
Mhm.
going on for like about 2 months now since
Yeah.
like that October 10th day.
So if I were to ask you, just to put you on the spot here, are we going up or are we going down? Like, is the AI train going to continue going? Like, in your opinion, or do you think we're reaching the top here? Like, well, what is your thought? Just a
Yeah,
really simple
simple.
question.
I
Yeah.
I think we're gonna keep going.
Okay.
Yeah, I think we'll keep going because, like, if you just look at what the leaders in the industry are saying, they are continuing to invest in AI infrastructure. Nvidia and AVGO or Broadcom rather. I know them more by the ticker, but yeah, Broadcom is also saying that they have an insane amount of demand, and they are like the main chip suppliers for this whole venture. So yeah, I think we keep going.
Yeah, yeah, and kind of jump in here in my perspective as well. I also tend to agree, at least from a business perspective, that the AI train is going to continue going. I think from like an operator perspective, maybe not. Obviously, this is all business. From an operator perspective, I think the big unlock for me was understanding how great of a model improvement that Gemini 3 was and even that was trained on Google's own TPUs. And
Yeah.
what the market has not really seen yet is a true new foundation model that has been trained on Blackwell, right? Which is supposed to be significantly better than any other chip previously. So you talk about the H200, all the current models today were trained on the H200, the Hopper. And I think the common narrative was like, hey, look, like, why are the new GPT models not getting significantly better, right? Are we tapped out, right? From GPT, 4, and then now you have 5. And the idea was like, wait, hold on. Actually, GPT-5 was actually really made just to kind of reduce costs and increase margins, let's say for OpenAI. But then you saw Gemini come out with this new TPU that, well, not GPU, OpenAI was trained on GPUs, right? But now you're seeing Google come out with a new model trained on TPUs that's performance is significantly better than OpenAI's that actually made Sam Altman issue a code red. And so I think like moving forward, right, if you say that the pre-training kind of idea is still intact, we have still yet to see what a really, really great new foundation model trained on the Blackwell chips could actually do, right? And so when you start thinking about that, it's like who's going to get there first? Who is the best at building data centers?
Mhm.
What are your thoughts there?
Um, yeah, I guess, like, who's gonna get there first?
There's one man who's very good at building physical infra. Who do you think that is?
Jensen, bro.
No, yeah, yeah, yeah. So it's Elon actually, Grok,
Oh,
right? Because,
I see.
this guy is obviously very good at atoms, right? And scaling up these data centers quite quickly. And so now you basically have this like arms race of like who can spin up the fastest Blackwell data centers the fastest and come out with this brand new model trained on a significantly better chip, which
Right.
is really, really,
Right,
really,
yeah.
yeah, which is really, really, really exciting, right? And so I think the whole market is really going to be eyes wide open to that. And, you have basically Elon, who, you know, we'll see how Grok does. I don't know too many people that really use Grok over, let's say, Gemini, but I think people are kind of like holding their breath, kind of waiting for like what that performance is actually going to look like. And I don't mean benchmarks. I mean like you're going to use the product and be like, wow, like this is really, really good, right?
Yeah, yeah. I think like these big players who are building out gigantic infrastructure, I think as us consumers, we probably like might not see a lot of its effects
Mm.
or like what those like data centers are really, really good at. We probably won't see them because like, for example, with Elon, I'd imagine a lot of that data center infra is used for FSD and also like other models that they're experimenting on and training on that they will later release. And I think a lot of these like the really like powerful models may not necessarily be meant for, I guess, consumer use. Like for
Mhm.
example, we have Meta. Like Meta's gem model for better advertising placement. Like, yeah, us consumers, we don't unless like, we're casual business owners, like we don't have much of a use or time to interface with that. It's probably same thing with Google and their ad placement. So yeah, I think it's like a matter of like from a business perspective, like how much they can leverage the AI. And I think, yeah, there's I'm generally pretty excited about what Tesla would have in store for this because I believe robotaxi is going to be like a huge game changer for just like everyday lives. And also like once we have Optimus kind of coming, I know that's like a super kind of far out like vision, but I think it could be, yeah, uh, very key for, things like how Oracle is saying, "Hey, we are just short on human labor." Like,
Yeah.
like the Tesla humanoids is the answer to that, 5 years, 10 years down the line.
Yeah, so I actually think that you will see meaningful improvements in the LLMs, even just on the Gemini kind of a chatbot layer. And that kind of brings me to my next question, which is, do you think that even from like a business operations strategies perspective, do you think that OpenAI is the next Netscape?
Oh, fuck, what's what's,
Okay, it's just some context really quick. Nick is a lot younger, and I don't even know if he used Netscape. Um,
dude,
so okay. So let me give some context here. Well, I mean, I used it when I was a kid at the library before I played. It's how I would access RuneScape, right?
okay.
But I think the
I
the
used
question is,
Internet Explorer
okay. So yeah,
when I was in
you're
elementary school playing
yeah. So
RuneScape, it was
okay, so you're a little bit later. I guess okay. I'll give you the context of my question. Obviously, OpenAI today, they have the lead in terms of chatbots, right? Like ChatGPT. I think it's like 70% market dominance. I think previously it was 90%, and Google continues to catch up. Obviously, I think that a lot of this is running unprofitably. OpenAI is clearly
Yeah.
unprofitable.
Mhm.
And to give you an analogy, or to give you kind of a question, which is that like it's clear Gemini 3 is comparable, if not significantly better, in my opinion, than ChatGPT, right?
Mhm. Yeah, yeah.
Google makes I don't know how much, like 75 billion free cash flow a year. I don't know. Actually, it's really embarrassing. I don't know that number. But my question is, if Google can run at a negative 30% margin and just subsidize chat costs effectively forever to win market share, what happens to OpenAI?
Yeah, yeah. Well, first of all, I don't know the free cash flow number myself, so, that's why we're the full port pod. We full port, we don't know these things, it's all good. Yeah, so yeah, dude, Nano Banana Pro 3, right? That shit's crazy. So
Okay, I was close actually. I was close. So last year was about 2025 hovering between 73 and 81 billion. So
oh,
thank God
nice.
I wasn't too
Nice,
far
nice.
off. I was right in the middle. There you go.
Yeah. It's OpenAI was like the first kind of like major releaser of, AI chat. It's tough for me to believe that they become kind of like irrelevant to the point where I don't even know what they are, i.e. Netscape. Like I don't think we'd ever kind of get in a spot like that. They were kind of like the industry leader for a long, long time, I think. Well, we're not industry leader for a long time. Not long, as in just like for the past like 2 years. But their research component has been around for a long, long time, like 2015 maybe? Like,
About a decade. They just celebrated their 10th birthday, basically.
yeah, yeah, yeah. So, yeah, I know of a few very smart friends who've worked there too. So, yeah, this kinda sounds like a generic answer, but it's kinda like it's a rising tide will raise all boats type of thing. Like, I think there are people like, when I kinda, like, survey among people I know, there's a lot of people who surprisingly still use ChatGPT as their main default, which kinda leads me to believe that, like, yeah, we're gonna have a future, where, like, we're using tons of different, AI, like, models, each for, various specific use cases or whether it be generic. And as, like, we adopt it more throughout the industry and just, like, personal lives, like,
Mhm.
I don't think it's gonna, like, go away per se. Like, the classic example I like to think about is how we have Microsoft Cloud, Google Cloud, and Amazon Cloud, right? Those 3 kinda just, like, continuously grew, like, together, essentially.
Mhm.
And they are still continuing to grow as well. So, yeah, I don't think it's, like, a situation where they become completely irrelevant. Uh and also, like, you do see these, different models being released be very, very good at, like, specific things, like, for example, with Grok, like, I think Grok primarily indexes X as, like, for its data, which, X as a curation for source of truths can be, like, could be skewed based on, like, a volume of tweets or whatever and, like, how people are using it, how people are campaigning on it. So, yeah, I don't think it can go away. Yeah.
Okay. Got it. Yeah, a few more questions on kind of the AI section of this podcast. Because I think like as we talk through it, you're starting to see like, wait, I actually think that the AI narrative can continue to grow, right? Like because Gemini got so much better, and then we're all waiting for the new models that have been trained on Blackwell, you can kind of see like the pre-training narrative is still intact. And what we basically had when there was no real new model development was, I don't know if you remember, I mean, you definitely do remember because, I lost a bunch of money and I was crying to you about it. But when DeepSeek came out and they basically came out with the whole idea of the, chain of reasoning, right, that basically increased the significant amount of compute that actually was needed to kind of complete a single query, right? Because it was like checking through every single kind of thing to like ensure that I was giving you the most proper response. That
Yeah.
like segment kind of carried the market maybe for almost a year when there was like basically no new models, right? Because a lot of people were like, okay, well, like have we topped out? But it's like, oh wait, actually, we have this new thing called training that's like gobbling up all the GPUs. So we're good, by the way. And then now you have these new models come out that are even more resource intensive, that are giving us better answers. So that's really nice in the sense of like that pre-training kind of narrative still staying intact, that chain of reasoning narrative still staying intact, which is really, really good. And so this kind of brings me to kind of what you kind of mentioned previously, which is that like, let's talk about China now. So Trump, obviously, the master of pumping the bags. Nvidia has now been approved to sell H200s, the Hopper GPUs, not the Blackwells, the Hopper GPUs
Older, yeah.
to China, right? And what we've seen kind of in the news is that a lot of these Chinese tech companies, obviously, you want to go national, you want to support Huawei, But like we all know it's not that easy to kind of create these chips, right? Like Nvidia has been working on it for so long, you can't just catch up overnight.
Mhm.
What do you think about that? Like, why didn't the markets pump when we heard that? Why didn't Nvidia go to 200?
Dude, yeah, it's
Nick, tell me.
I mean, dude, like, there's, yeah,
Why am I
it's
not rich
funny.
yet?
Yeah, it's funny because I was hanging out with a good friend, like, the night before that announcement or a weekend before that announcement, and he was like, "Yeah, if Nvidia and Trump announce, like, that they could get the green light to sell in China, like, Nvidia's revenue is gonna go up 30% overnight." Like like, it's just like,
Mhm,
it's gonna
mhm,
everything's gonna be, like it's gonna be amazing for Nvidia, right? And, yeah, the announcement came out, but, like, no price reaction, right? It was very, like it was kinda that moment where you would see as, like, a trader, you're browsing on Twitter and you're like, "Whoa, like, really good news came out," and, like, the stock didn't move. Like,
mhm.
and then, like, when it's a situation like this happens, you'll commonly see tweets come out that are like, "Wow, if a stock doesn't move on, like, amazing news, then, like, we're fucked." Like, this
Mhm,
is
mhm.
bad, right? But surprisingly, like, I didn't see that exact thing for Nvidia, but, like, we're essentially seeing that because of the AI bubble fears. But, yeah, like, sometimes if a stock doesn't move off of, like, really good news, it's literally because a lot of people are in already. Like, willing buyers are just already in.
So the big question is like, you know, the really big question is like, is it contrarian to go giga bold then? Or do you think we truly are just like are people tapped out? Are people is there no more sideline cash? Or do you think this is one of those things where it's like, oh, people don't realize how much further this could go. We should slam some calls right now.
Some oh, man. I mean, it is probably contrarian given that market sentiment is in the fearful section. So, by that metric, yeah, it's definitely contrarian to kinda, like, slam calls at the moment. Would I slam short dated? No. I almost never slam short dated, but, I think it could be worth at least accumulating some, at least if you kinda, like, see IV crushing because I think IV was higher after like, or rather, yeah, IV has just generally been higher on Nvidia calls, and so if you can kind of see them sell, if you're buying lower volatility, it's probably better to buy the long term calls. But yeah, I mean, is it contrarian? Yes. Do you want to be contrarian right now? I don't know. Like
It's hard to say.
sometimes it's best to just go with whatever the masses is doing, right? So it's funny. It's funny that we're talking about like I guess market predictions because like Martin Shkreli said something very very interesting about Jim Cramer. So Martin Shkreli used to work with Jim Cramer,
Mhm.
and he says that he's like the smartest hedge fund manager like ever, or like not ever, but like he said he's a very, very talented guy. And he said that Jim Cramer has a very interesting job because he's on air all the time on CNBC in front of so many eyes. And so as a result of that, like if you just like if you're in front of a bunch of people and they're like, yo, what's gonna happen with the markets? And then you're just like, I don't know. Cause like most of the time, realistically, no one
Yeah,
knows, right?
who knows?
Yeah. So if you're just saying, I don't know, no one's gonna watch you. Right?
Yeah.
So
Yeah, and I think this is the thing about, like, making prediction that sucks is because, like, timing is impossible, right? But every single day, we're always receiving new information, and we have new predictions in our own heads. That's effectively how we operate, right? More
yeah.
info, more calculations, and whatnot. And you're absolutely right. It's like Chamath obviously makes predictions. Arthur Hayes, I think that was the most interesting one to talk about crypto a little bit. And before we hop there, I have another
Yeah.
segment. But with Arthur Hayes, I remember when he was like, "Guys, hype is the best shit ever. It's amazing. I'm
Yeah.
going long." And then a week later, he dumps it all.
Yup,
And then
I remember that.
everyone was like, your ass, you
Yeah, I
suck.
hate you.
You're dumping on our ass." But it's like, bro, like at that point in time in which he recorded the podcast, obviously I'm not putting it completely out of the picture that he's dumping on retail in the audience. Like that's certainly very possible. It's a valid strategy, I suppose, for some people. But I honestly think it's like, dude, like he probably received more macro information and he was like, wait, actually now it's time to de-risk, and he de-risked, right? Like it's not up to him to kind of go on X and be like, hey guys, by the way, on my podcast, I said this and you need to dump now because the
Mhm.
markets are changing, right? So I think it's quite interesting. And the reason why I bring this up now is because like, we just did a segment on AI. I think both you and I are quite bull and we want to go long, right? Or at least stay long.
Yeah.
Maybe not open new positions, but we want to stay long. So talk to me about other factors in the market. So let's talk about the recent Fed cut. Let's talk about QE. Yeah,
Yeah.
let's walk us through that.
Yeah, so I have a notes here on it. Yeah, so basically, yeah, Fed rate cut 25 basis points. They announced, yeah, the ending of QT, quantitative tightening, which is when they were reducing the size of their balance sheet, which was essentially means they're moving assets from their balance sheet to the open market. Um, They then said, we're now going to start purchasing bonds by December 12th. We're going to put in volume of $40 billion. That's a number that is about a third of how much monthly purchasing the Fed was doing during COVID markets. So, in 2020 and 2021, every month they were purchasing, with the exception of a few where they purchased far more, they were purchasing 80 billion in bonds and 40 billion in mortgage-backed securities monthly. So that's about 120 billion bucks of volume every month injected into markets. This time they're doing like a third of that, 40 billion of bonds. So so a lot of people are kind of getting like bulled up and excited about like, oh hey, QE's back, like they're injecting money into the markets. But so far it's like a pretty small amount. I don't
Mhm.
think they announced a larger plan yet to like say, oh, throughout the future, throughout like months ahead, we will continue this type of buying activity. I believe they did not do that. So it's not like, I guess, the most exciting QE announcement
Yeah.
that
How
it
do
could
how
be.
sh Yes, like, how should I feel about this? Genuine question, right? Because like, I read a lot about AI, I'm very interested in it.
Yeah, I
Macro, it's
mean,
like, I see something, I'm like, "Whoa, that's supposed to be good," right? Like,
yeah,
well, help me contextualize it. Like, should I be bullish? Is
yeah,
is this a lot of money, right? Like, frankly,
yeah.
is it gonna
So
move the markets? Are my bags gonna go up? Like, help me get some context here.
yeah, so there's a common saying which is "Don't fight the Fed," which is what you would say in reaction to a bear in conditions like these. And I think that's pretty valid. Furthermore, I forgot exactly I don't know if they announced I think they might have said two more rate cuts by 2026, or Trump said that. Either way, it's probably going to happen because Trump's going to replace the Fed chair with like someone he really likes. So, like in general, I think that's a very bullish thing. I don't think we'd see a slowdown like with these factors. I don't think we'd see a slowdown in company earnings, for example. These are the type of like macro conditions that, generally speaking, support economic activity and just like the velocity of money.
Mhm.
So I think with respect to that, things will look good there. Now, obviously, we're currently in a situation where earnings and market are not aligning, right? Earnings going up are forecasted to go up, and markets are not cooperating in that matter. So yeah, like, can you be bullish? Yes. I mean, but like you probably won't see immediate results because currently markets aren't cooperating in that way.
So,
So yeah,
yeah, I mean, I guess, like, taking those 2 things into account, right? So you have, you know, sentiment, narrative around AI. Both you and I think that we wanna stay long we wanna stay long.
yeah,
And
yeah,
that could be contrarian to the market today because a lot of people like Michael Burry could be screaming, "Scam, scam, scam, blah, 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 blah," okay? We won't dive into Michael Burry right now, but just according to you and I, state of the market, macro-wise, AI, we think we wanna stay long. Based on what the Fed has said, a political landscape, from that macro perspective, it seems like what you're also saying is, "Don't fight the Fed." We're pretty
yeah,
bullish.
pretty much, yeah.
In that case, what we buying?
What we buying, yo,
What we buying?
yo.
You know?
Adding it to Nvidia long-term calls right now, that looks very attractive. The good old meta play, still attractive, although I currently do not have any meta calls. I offloaded some of it because the position simply was too attractive to not offload. So, I will add that on soon as well.
Okay.
And
We'll
then
cover that at the end.
yeah, and then,
Um,
wait, actually, I do wanna make a quick note
please.
about Michael Burry
Yeah, yeah,
because
yeah. Please, please, please,
I
please.
think,
Yeah.
yeah, it's pretty wild what we're seeing. So, essentially, he started his paid Substack, right?
I am a subscriber.
Oh, really? You bought it?
Yeah.
Okay. Dude, yeah, share it with me later. I'm kinda curious.
Mm.
But,
Whoa, 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 whoa. Just kidding.
yes, yeah, Michael Thor, you're pirating your content. No, I'm just
Yeah,
kidding.
yeah.
Yeah, so, dude, he's a great he's great marketing, like, actually,
He
right?
is. Absolutely, yeah.
Like, every time I don't think that man has ever said anything bullish about the markets. So, like, I guess he pretty much captures the entire bearish market, like, or rather, like, the heads who are very, very bearish. He pretty much captures all of them. And, like, by constantly announcing these headlines at times where people are really seeking a reason for what's going on in the markets and they just wanna hear something, he ends up getting a ton of eyeballs. And that's kinda like that's kind of it, at least for what I see it. Like he's just phenomenal at getting eyeballs at
So
like
you think
the
he's
right
like
time.
you think he's the voice of the bear?
Yeah, 100%. Yeah, he's the voice of the bear, and he's good at it. And on top of that, bro, he knows he's so good at it that he launches a paid Substack, right? Like, what? That's
Bro,
phenomenal business
yeah,
practice. Like,
you're right. I got so scared. Like when he was like he kept tweeting like a date. He's like, "It's over for y'all. Imma tweet on this day. It's over for y'all. I'm gonna expose you guys." And then he's like, "Substack." I'm like,
yeah, dude. Like,
"Bruh."
yeah. And then he I think this weekend he tweeted, "Oh, I have a big tweet coming out about GameStop on Monday."
Mhm,
So on
mhm.
top of capturing all the Bears crowd, he's now going to capture all the GME like apes on Wall Street bets to also subscribe to his Substack. So yeah, I mean, dude, great businessman, great
Great,
businessman.
great businessman. Cool. Alright, so moving the conversation along a little bit, Nick, you spent quite a bit more time digging into crypto this week. Would love to have you tell us about it. I think starting at the very top, I think Hyperliquid has made some announcements, so why don't you dive in, give us a primer of what's going on there?
Yeah, so Hyperliquid on Friday announced that they're essentially going to have a feature that enables portfolio margin. So,
Okay.
real quick, I mean, like to give an idea of what Hyperliquid is a decentralized trading platform that first came out as just trading perps, which is a leverage instrument where people can just do anything from like 2x to 40x on Bitcoin, do that type of trade and have like a collateral to support that trade, and they'll get liquidated when the price moves against them, whatever percentage amount based on the leverage. And they could also make a ton of money, assuming that it goes in their favor. More often, traders lose. That's just how this business model
Very
works.
often, very
Yeah.
often. I we that graph is like they actually publicly show the graph
Yep.
of traders P&L, and it's
Yeah.
just like, "Merp."
Yeah. Yeah. Yeah.
Yeah.
So, and all that money goes straight into Hyperliquid's liquidity provider, which is like a decentralized, like basically storage of money that just like takes the other side of all the traders' trades. So all that money basically kind of just goes into there. So that's what Hyperliquid is. Very successful product, great product. I've used it myself. Lost a ton of money on it, um, but you know that's
Dude.
yeah, that's a separate story. But yeah, so they've been getting better and better. Uh, and I guess like the middle of this year is when Hyperunit came out, which is a extension to Hyperliquid that allows you to deposit spot. So it allows you to deposit your Bitcoin, your Ethereum, your Solana. They also added meme coins on it like Fart Coin. I believe they added SPX6900, so you can deposit your spot tokens there. And then the natural next step is to take your spot and use it as margin collateral for your leverage trading. So instead of like just locking up USDC or dollars directly for taking on perp positions, you could just say, "Hey, I have like $1 million in Ethereum. I now want to take like a $500,000 perp position," and you could collateralize and like basically half your Ethereum spot would be used to as margin for the per position. So why is this a pretty good invention? Well, what people were doing commonly all throughout, I guess, the past 5 years in crypto is this basis rate trade. And what that is that basically to fund these leverage per positions, you have to pay a fee either every hour or every 8 hours to the other side of the trade. And so typically you would have longs paying shorts because most people are just generally long. Sometimes that could invert to shorts paying longs when fear is more of this fear is like the leading sentiment in the market. So what people would commonly do is they like deposit $1 million of Ethereum and say Bybit, some centralized exchange, and then Bybit would allow that account to marginalize their Ethereum and short for for simple example's sake $1 million in Ethereum perp. And
Mhm.
then that starts to then allow that player to basically be delta neutral on the Ethereum position, but then just earn kind of cash flow of like 10% a year in funding rate fees to that because they're basically just taking the other side of a bunch of long per positions.
Okay.
Typically, like these funding rates can skyrocket to maybe 80%, sometimes in super euphoric conditions, over 100% APY. But this API would only last for like a week or two. So it's not necessarily like, 100% a year is earned. It's just like 100% a year is earned for 2 weeks. So not nearly as much as as much as that. So
Yes, so help me understand, let's say, like, you're Joe Schmo, retail Joe Schmo, Hyperliquid came out with this announcement. Walk me through a user story. Why should he care?
yeah, so well, actually, interestingly, a retail user is probably not that interested in exactly portfolio margin. I'll tell you why. Because typically, retail users are more interested in multiplying their capital, right? They're
Right, more
interested in
volatility, yeah.
more volatility. So like, but also, I guess if you have the scenario where like retail users are very interested in taking like maybe a good chunk of like their portfolio, 100K or 200K, and then like put that in Ethereum or Bitcoin, and then they can then earn cash flow off of like that 100K Ethereum that they have. But that also kind of like restricts them to not taking a part in Ethereum price appreciating. So if they're ever in a spot where they want to like kind of hedge their Ethereum position, this was like a pretty good product and use case for
Retail
that.
doesn't hedge, bro. I don't
Yeah,
hedge.
yeah, retail does not hedge. Yeah, so, um, if you're like a player who's trying to like, I guess, maintain capital, or like if
Okay,
you're, yeah, then it's more interesting, I guess. But yeah,
got it. Okay, cool. Moving on. So what else has happened in crypto that you would like to chat about?
yeah. So IBKR, very a traditional brokerage, a TradFi brokerage, pretty big, global. They announced that they're going to slowly roll out funding accounts with stablecoins. That just kind of goes to show like the further overall adoption globally of stablecoins kind of developing. And like, I think that's pretty wild because in the traditional path, or like in the path about 2 years ago, you would like withdraw your stable coins from the chain to a centralized exchange like Coinbase or Kraken. Then and during that transaction, you might get like flagged for like anti-money laundering reasons and stuff like that. And then the next step is you move that money to your Chase bank account or Wells Fargo or whatever. And then in that spot, you might get flagged for like money laundering or whatnot. And then you could probably move it from like your brokerage account once it's in dollars. So yeah, I have a few friends who've just like straight up just are just banned from Chase because like they moved money from basically on chain and Coinbase to Chase, and then they just didn't like it. Like they just flagged automated like threat detectors, and yeah, they no longer they're debanked from that institution. So it's a pretty big innovation. It also kind of makes reloading easier. Like if you're ever like if you need to rebalance your portfolio where you have a lot of like stable coins on chain and not much fiat, and you want to like take an opportunity to try to find markets, this might help with that. And I think that's a pretty good innovation because typically you'd have to wait days for all these
So
transactions to
so
settle.
yeah, why do that versus just put it on Hyperliquid where you can already trade
Yeah,
stocks?
yeah, no, that's a really good question. Hyperliquid is, while it is a mature product, I think every now and then you'll have these like kind of like really bad events happen on it that make you regret using Hyperliquid. Like for example, like October 10th, right? Like there was an insane liquidation event, and people with like 1x, 1.3x leverage on their account, like they would lose it all. And 1x leverage in a traditional brokerage account in TradFi is very common and very normal. And if you go through a liquidation, I don't think you'd ever be losing your entire portfolio. Like they would liquidate you with areas with enough liquidity so that you're left with, I don't know, 0.8x maybe, like
Mhm,
like
mhm,
in a
mhm.
worst case scenario, like, so that's like a reason why you may want to like not, I guess, use a
Yeah.
Hyperliquid because it is experimental, and like adding portfolio margin is, yeah, a feature they have only on their alpha, I believe. I believe they're starting to roll it out slowly on their beta, and then it'll be on mainnet sometime after that. So in general with crypto, with these new financial instruments and these new calculations of like financial derivatives and your money being at stake, history will tell us that there have been many kind of like science experiment gone wrong situations that are irreversible. So yeah, it's just something to be cautious about.
Okay. And I know you were pretty excited by this. I've done no time into looking into this, but apparently it's been going through crypto Twitter. Tell me about Murad, SPX6900. You told me you're about to full port. Is he the new meme coin Jesus? He already is. Well, he's no longer Jesus. He cut his hair and he looks
He
great.
did. Yeah,
Yeah.
yeah.
He's like look maxing. He learned from clavicle or whatever, right? Like tell
Yeah.
me Well, what's happening there? Give me like a TLDR pretty quickly.
Yeah, I mean, so I was just browsing Twitter and I think this came in a group chat. I was just like, hanging out in some chats and then like someone posted Murad's back, right? Like and then he has this like 10-minute video about how SPX 6900 is the next GME. And I think it was I mean, last year in September 2024, I believe, you were telling me about how we should buy SPX 6900, right? I
Yeah,
think
yeah,
Murad
yeah.
was talking at some conference and you're like, "Yo, look at
He's
this
talking a
guy."
token. He is a token. Yeah.
Yeah, you're like, "Look at this guy, like, he's so good at pumping his backs." And I was like
Yeah. Very, very compelling salesman. Incredibly compelling.
yeah, and I started listening to it and I was like, "Damn, this guy is really good." But he kinda looks like a scammer, so I don't wanna log it right now. Um, but, yeah, so, he's back, a year later, he's back, supporting his bag. And yeah, I watched the video, and he's very good at basically taking like a past very successful narrative, which was the GME short squeeze in January 2021, and comparing it to the potential with SPX 6900, and also kind of talking about the events that are like, hey, with meme stock short squeezes, you could have companies do a share offering and that'll just dilute the shares, crash the share price overnight, and you're kind of just rug pulled. Well,
Mhm.
with that 6900, you can't do that because it's backed by smart contract code that you can't just mint tokens overnight. And then he
Mhm.
says, like, how a bunch of exchanges prevented the buying of GME, right? He was like, hey, in the decentralized world, it's on 24/7 and no one can shut off buying and selling. So he says all these things that like make you extremely like excited and willing to even to buy SPX 6900, right? So he's very good at driving that story. Why I was considering like buying it is because, well, crypto has just been sold off a ton since like August, basically. Nothing really exciting happening, especially in the altcoin world, right? So basically the way I model is like the more time that passes, the stronger the likelihood goes up of like, hey, we'll have an alt season maybe. Like that's a very like low level like thought I generally have about how to navigate these things. So yeah, that's why I was considering long it. Also, another interesting thing about it is that SPX 6900 went through this protocol called I think it's called OFT. I forgot exactly what it stands for, but it's a protocol developed by Layer Zero. And what they
Okay.
essentially do is they take SPX 6900, I believe it originated from the Ethereum blockchain, and they make it available to port it
All
over.
chains basically.
Yeah,
Yeah,
port it
yeah.
over to Solana, port it over to Arbitrum, etc. And it's all backed by this OFT wrapper. And that actually kind of creates an interesting arbitrage opportunity because now you have a bunch of different venues that or decentralized venues that trade SPX 6900. And if Murad is bag pumping this thing and it starts to catch a lot of like volume, then price dislocations will happen a lot. And so yeah, that's a potential opportunity there.
Okay, cool. We're kind of nearing 45 minutes on the pod. Pretty exciting. I think there's a lot to talk about last week, but I kind of want to wrap up this podcast today with a new segment called What Are We Buying? I'm just kidding, but it's more of like a portfolio. What's in your portfolio right now? What are you buying? What are you thinking of buying and why?
We got them Nvidia calls, right? It's the simplest bet you could do on AI bubble not being over. Things I'm considering is CoreWeave calls. It's simply Nvidia but higher beta. And I think throughout this year, I've looked at rotations among mags. That just seems to be something that continues to work. Uh, I think it'll like yeah, I think it'll continue to work, but like man, it would suck if it doesn't. But like, but there is that. So that's just like one thing I'm looking at. As far as cryptos go, I own nothing worth noting. I own like, the few meme coins that we just have interesting projects behind. That's about it really. I don't own anything else.
Got it. Yeah. So on my end, I think a quick portfolio review. I think a majority of my portfolio currently sits with Meta. I had bought calls with Nick a few weeks back after the earnings took a big dump, rode it all the way down, drew down quite a bit, probably the biggest drawdown of my life. Maybe I like pain or something. Maybe I just love it. But I'm still holding on. I have calls kind of dated in January, which I regret, are very underwater, but it is what it is, learning experience. March and June, really just observing those. I've also kind of moved a lot of it to just basically holding shares as well, just largely because look, I learned my lesson playing with leverage. It's helped me well, but it's also been really painful. Something else is I restarted building a position in Robinhood. It's kind of traded down. It just kind of drew down 15%. They released their monthly metrics. They usually report their monthly metrics, and a lot of the numbers are down across the board. This is kind of to be expected. I think like, the market has kind of traded sideways. I know SPY is up, but a lot of people were kind of hit over the last few weeks as there's a lot of market uncertainty. I don't think that really means the core business of Robinhood is bad. Obviously, I know it trades beta to SPY, but with crypto being down and SPY, with a lot of uncertainty, a lot of people are trying to de-risk away from Robinhood. The key event to kind of look forward to next is they're having their yes no event happening on the December 16th. I will be attending in person. Assuming it's yes no, I'm going to assume it's something about prediction markets. It's their fastest growing business line right now. They have all the liquidity, they have all the users. They're currently 60% of call sheets revenue. I assume by buying their own brokerage, they're going to be migrating off. And so, really, really excited. Maybe cat's out of the bag. I know these events don't really pump things as much anymore because everyone already knows that they usually announce something pretty exciting. But
I will
usually
say
you see a nice little gain before a sell off. But please, yeah,
I will say, dude, Robinhood prediction markets is like it's so addicting. Okay, like
it is.
the access to just a simple like prediction market bet like that, making it so easy is like really like powerful.
It's really powerful. It's go
Like,
go
okay,
go ahead.
I was
Yeah,
having a wholesome hangout yesterday with friends, right? And then like we turn the NBA game on, right? It's OKC versus the Spurs, and we're like, yo, let's pull up Robinhood. Let's see the odds on this, like just easily with the you just start. We're already kind of like on our phones a little bit. We're like, all right, yeah, let's see the odds, and then we're like, okay, like Spurs and OKC, it's like 10 cents and 90 cents. We're like, let's put a stink bid in for Spurs. Fuck it, right? And then just like now
did
we're
you hit?
gambling,
Did you
dude.
hit?
Dude, Spurs hit. Like my okay,
Oh
so
my
so
god.
my friend put in a bet for Spurs, but he sold it like when it like 4x, right? But like because like we thought OKC would win. It ended up being a really close game. But anyway, the point is like just from having like a casual like we're not like these aren't like we're not like stock trading people or anything that like we would normally gamble all day every day. We're just like turn the game on, boom, we start betting. Like
I agree. It was the
yeah,
same thing, right? It was like I was with a coworker. We're at the mall. We're like, "Yo, dude, you want to just like grab a beer or whatever, like just to hang out?" And then on the TV, I think it was like UCLA versus USC, and we're like, "Bro, what are the odds right now?" Whip open Robinhood.
dude.
What's a little $1,000
Um,
gonna do? What's a little thousand? Yo, we could earn. Yo, like it was like Black Friday shopping. Yo, we could buy a table with this. Yeah,
yeah,
why don't we just hit it? Obviously, I fucking lost, but like.
dude.
And you like, oh my god, like why did I fucking do this? But it's like
Yeah,
because it's like such a minimal portion of your portfolio, you're just like, whatever, it was fun.
yeah,
Right? I'm probably gonna lose it when aftermarket opens at 5 p.m. today, anyways. So I might as well just kind of give it a run and have some dopamine, right?
yeah. Also, like, yeah, the 2 cent fee on Robinhood is so wild. Look, like we because Robinhood made it so easy to access, I am still paying this 2 cent fee. I could go on
Yeah.
Polymarket and completely avoid this 2 cent fee, but I don't because like it's just on my phone. And it's so easy to do it. My money's already there, so it's like, yeah, very very powerful business. I think it's like, yeah, I'm really excited to see what they announce on
Yeah.
in 2 days from now or 3 days from now.
Yeah, no, super excited. I think it's like Robinhood is one of those stocks you kind of just want to hold for forever, honestly, right?
Yeah.
It's like they don't even consider themselves, Vlad has said this several times, they don't even consider themselves just a brokerage app. Like, obviously, I'm on their banking product. They have basically all my liquidity now, where I'm on their banking product. I obviously trade through Robinhood, the core app. I use their credit card for 3% cash back, only on only when you transfer to your brokerage.
Me
And
too. Yeah,
you're starting, yeah, you're
I
starting
have all that. Yeah.
yeah, you're starting to see them chip away at the business, right? They just bought a brokerage in Indonesia, which has a population of 300 million. Not many people know that. Very, very active market in Southeast Asia. Um,
Hmm.
it's it's just a crazy, crazy business, man, with an excellent team. I think it's like it's scary. It's like you look at one of those teams, like, okay, I'll give you an example, a core thing, right? When you go to one of their events, like you can see Vlad like announce something, and then you just kind of like looking around the crowd to see how everyone's gonna like react, if they're happy or not. Right? When the cash delivery thing came out, he was like, he looked like a little child, like, oh shit, right? So he's like, they're so customer focused. And then like after the presentation is done, all their product people are there and they just like come up to you and they're like, "Oh, hey, you're Alex, right? Like I was emailing with you. I actually saw your name and can I interview you really, really quick?" And they'll literally go down and be like, "Yo, is there anything we can improve? Is there like do you think this product would be better like this? They do live demos and they really kind of iterate so quickly. Like, how can any other brokerage compete? In fact, how can any other bank compete? Like, it's just
Right.
so difficult. It's exhausting thinking about what it would cost to compete against them because no one else is doing that. They're dominating you in design, they're dominating you in branding, they're dominating you in UX, right? They have a great product, and now they're doing the classic, like, you know what? We're not going to spend on direct performance marketing. We're just going to give bonuses away. They're pulling away your liquidity, and they're fast, right? Do you remember the whole like Tesla thing? They're like, hey, by the way,
Oh,
oh, other
yeah.
brokerages, you're not going to let your shareholders vote? Oh, well, if you bring it over to Robinhood, we'll give you a match, right? And it's
Yeah.
just so like I don't care what anyone thinks about like the ethics of like. I mean, sorry, I'm not that I don't care, but it's like, oh, why is the gambling inside of Robin? Okay, yeah, well, whatever, man. Okay, I understand. Like, there's some drawbacks there in chase of like new business lines and new revenue, but it's like no one else is moving this fast. Tokenized homes, like tokenized real estate, right? Fractionalizing it, tokenized equities. Like, bro, like, relax. Like, how are you so fast, man? Like, Jesus, you
Yeah.
know?
No,
Yeah.
dude, he's taking market share from all the traditional leaders in finance. Yeah. No, I totally agree. It's yeah, dude, I've used Robinhood since like, and you too, right? Like we've been on Robinhood since like 2017, maybe. Like
Mhm.
it's come so far. It was like, yeah, it was from the OG Wall Street Bets days. Like everyone on WSB in 2017 was using Robinhood. Yeah, and I got onto like their credit card, their checking. Yeah, and I took advantage of like their match stuff for the IRAs and stuff like that last year. So yeah, it's good. They had a minus 10% day, I believe, on Friday. So Vlad gives.
Dude, he's a life, dude. I've met so many people, and we laugh about this. I've met so many people from the Robinhood events that traded six figures to seven, eight figures just buying the dip of
Right,
Robinhood,
right, dude.
just buying the dip, right? There's so many accounts. You can just go find them, right? The
Yeah,
man has given,
the
and
man is given. Yeah,
the man has given, and the product is amazing, right? It's like it's backed by something, it's growing. Obviously, I know monthly metrics came out. At the end of the day, yeah, you're right. It is a beta on SPY. It does track the pulse of the markets. So like, yeah, like, if this AI bubble were to ever pop and collapse, it's kind of really, Robinhood will go down with it. But long term, I think it's an incredible business run by just some of the best operators in the world. It's hard to figure out like how they could ever be eroded by some new incumbent or something like that. You know what I mean?
yeah, yeah, totally. Yeah.
Yeah.
Do we want to talk about their numbers real quick for the November?
Nah, it's okay.
Okay,
I gotta
that's
go.
fine.
I gotta run right now, and I
Okay,
think we're
yeah,
running. I think we're running at almost an hour. So I'll
yeah.
I'll
We
splice this. I'll splice this part out. It's fine.
okay, yeah.
So cool, Nick. This was a pleasure. I think the hour is about a podcast. I think so. Nick, it was a pleasure. This was fun. I think the podcast is running up to about an hour now, and we got to get this one out. So I don't know. I look forward to chatting with you again. Well, I'm gonna chat with you after this. So it's like, man, we chat
Yeah,
all day long.
we chat
So,
every day. Yeah, yeah. No,
but
this
it
is
was
great,
fun.
man. Yeah,
It
I
was
think,
fun.
yeah, great job moderating. I think this was good. A good improvement from last time, and yeah, I like that. Yeah, we just riffed, bro. It was good.
We just ripped. It was good. It was
Yeah.
good. Cool. All right. Thank you, everyone. See ya.
All right. See ya.
Bye.
Bye.